ViacomCBS. First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we go to the other themes. And we have legacy media here, 285% from the 52-week low. That's monstrously outperforming the S&P 500. We see that AMC is one of the big super performers in this portfolio. ViacomCBS, it's a conglomerate, only 32% from the 52-week low, and a whopping minus 64% pullback. That obviously is pretty darn massive. So here is Viacom's CBS, their website, and you can see a bunch of their programs here running in the background. And they are obviously, a very big player in this whole media landscape. Okay. So these are weekly data points. This is, big picture. There are some kind of time cycles here, but, they have differed a bit over time as well. So we are currently testing the blue 100-week moving average. So we are looking decades into the past now, and you can see that this moving average, it's been a big deal as a support level, also resistance. Now it is being tested vigorously for support. So yeah, as you can see, ViacomCBS was also on a huge bubble spike. This is why I hate bubbles. When things looked peak bullish here, to the moon, we had, look at this candlestick. Just monstrously. Okay, so this was part of like a major blow up. But you could make a case here that this is a very interesting risk-reward opportunity, from a more bullish perspective. Because you have to ask yourself the question, why were people so bullish here? Why are they so bearish now? Can the narrative be that different? And this is like in February and March of this year. A lot of the bullish points that were made here, they are probably relevant here as well. That makes sense. Going here to the daily data points, it looks ugly from a daily data point perspective. We are below all the moving averages. This is like super ugly, bearish, but maybe it's so nasty, so vile that, bears are going to be a bit scared of going short at these levels. Here it makes a lot of sense to become a roaring bear, because here you have like obscene RSI and PPOs, just ridiculous. You have a record on the MACD, so it's a good time to be bearish. But at this point, looking here at RSI, and to an extent also the PPO, especially here the 20-week moving average, we are at a low that has been bought in the past. Looking here at the daily data points, we recently became oversold on the daily RSI and bounced. What I do find a bit bearish at is that we do not see accumulation yet. I would like to see that. So that is one of those things we have to look at very closely in the coming week, because we are at this very key support level where we expect the bulls to show up in force. But yeah, I think that the technicals here are looking way more bullish than bearish, though from a more contrarian perspective. So here are the correlations. So 12% with the S&P 500, 36% here with the PBS, which is the dynamic media ETF, 16-ish here, 16% positive with the social media ETF. And then we have minus 28% here with the dollar index, looking short term. Minus 47% here with the S&P 500. Only 15% with the PBS ETF, only 24% with social media. So you actually here short term have a stronger correlation with the social media ETF than the dynamic media ETF, and a mere 6% negative here with the dollar index. When we look here at seasonality over the last 5 years, November, December, and January are the strongest months. That is definitively not favorable for a bearish position. Over the last 10 years, November is one of the strongest months with an average 5.7% gain, not favorable for the bears. Over the last 20 years, you have a clear strengthening here from October, November, December. December is the strongest month, so this is not looking favorable from a bearish perspective, which means it's very interesting for the bulls. Going to SACS, number 3 hold, but we have an A value score, F growth, D momentum. The industry rank, bottom 10%, the film and television production, that's obviously not that bullish, but I think that taking here the average, it pushes me in a bit more of a bullish direction, especially the A value score. Dividend is 2.6%, that's nice, nice dividend. It's a huge company, $23 billion in market cap. Here is one of my new favorite websites, marketscreener.com. So what I really like here is to go to the ratings. You get this very clear, you get it ESG Refinitiv score, C, and a bunch of financial scores here, very easy to read. Looking here at valuations, certainly looking very nice. And let's look here a bit at, the consensus estimates. So if we go down here, you can see here that the average target price is $51, and that is 41% above the current stock price. The highest target price is 148% above the stock price. The lowest price target is minus 39% below. But you can see here that from a price target perspective, definitively, it's rather bullish. So if we sum up here all the data we have, I think that from a technical perspective, with this very clear support level, it's a pretty easy trade, because the risk reward level, the stop level is very clearly defined. If that support breaks, that is simply just bad when the seasonality is bullish and the fundamentals are clearly in a more bullish direction. So this is one of those situations, you want to buy low, sell high. Viacom is just flooded with bearish sentiment at the moment, and just like it was the bullish euphoria that marked the high before a major crash, maybe we are going to see something opposite now, that at these levels it makes a lot of sense for the remaining bears to cover, and we definitively want to have this one on our radar, because the expectation here is certainly that we will see some buying. But obviously, if the bulls do not show up, that will be very bad.